Hello listeners and traders, welcome back to Money Talk with Patrick. I am your host Patrick, trading mentor and creator of TC Trading. So in today's episode, I will be covering some of the concerns surrounding Bitcoin's environmental impact and the reason why Elon Musk has backed down from supporting Bitcoin. I will also summarize the key differences between proof of work and proof of stake. Remember, it doesn't matter if cryptocurrencies are up or down as long as they are moving. If you are interested in learning how to trade them, head to tctrading.com to find more about my Forex and crypto trading course. So hello everyone, how's it going? Once again on Thursday, here we are. I hope that you are doing great. Now let's tackle the elephant in the room, shall we? And what I mean by elephant in the room, of course, I mean what Elon Musk tweeted a couple days ago. So just to give you a little bit of background, if you are not aware about Elon Musk, of course you know who he is, but maybe you don't know that he is kind of like a strong advocate or slash supporter of cryptocurrencies. And I must say that it's more than he is an advocate. He seems to be an advocate rather than something that's actually official. In any case, if you go to his tweets, if you go through his history in his tweets, you will find a lot of memes about Dogecoin. You will find a lot of posts about Bitcoin, etc. You could potentially say that he's kind of like a fan, hyping Dogecoin around so much. But in any case, these are some of the reasons why he seems to be this strong advocate for cryptocurrencies. In any case, we are talking about him because of one of his latest tweets, specifically where he said, and I quote, "Tesla has suspended vehicle purchases using Bitcoin. We are concerned about the rapidly increased use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel." So basically what he's saying is that there's a concern in the environmental impact of Bitcoin. Now, this is nothing that's new, okay? This is something that's well known, that Bitcoin consumes a lot of electricity due to the nature of its algorithm. Now, that question is here, and why Elon Musk had a lot of backlash, and especially from the crypto community, which I already said that it can be a little bit toxic if they are really put in that place, if they're put between a hard place and a rock, like in this case. But the problem with this specific tweet is the history that Elon Musk has with, for instance, the SEC, with kind of like, I wouldn't say that he's manipulating the market, but he has a strong history with some problematics regarding that. And what I mean is that he has some problems with the SEC. For those who you don't know, the SEC is the Securities and Exchange Commission. Basically, they oversee all of the investments in the US, in terms of securities, in terms of what people are doing, what investment banks are doing, etc., etc. In any case, Elon Musk has already been fined before for talking about Tesla stock and trying to push the price up way back a few years ago. So they don't have the best relationship. And, I respect Elon Musk. I think he has done such amazing and great things that pretty much no one else has done, or no one else might be able to do for that matter. But in any case, it seems that he wasn't able to manipulate the stock market, and now what he's doing is trying to switch that into the cryptocurrency market, which is not fully regulated. So there's a lot of space for him to do that, because you have to think that he is really a smart man, and he already put $1.5 billion with Tesla into Bitcoin, and you wouldn't have put that money without doing previous research, without doing previous forecasts of how the environmental impact of Bitcoin would actually have repercussions in the real world, right? Now, they are still gonna be invested in Bitcoin. They are not selling the entirety of Tesla's Bitcoin, but they are pointing out that because of this issue, they are not gonna be allowing people to buy Bitcoin. Now, here is where I leave you guys think about it, reflect on it, because this is kind of all in my opinion. But is he really trying to say that Bitcoin is still a good thing, or is he trying to drive the prices down to maybe purchase more? That's kind of like the thing that everyone is speculating, and where all of this um, polemic regarding this specific tweet comes from. In any case, let's talk a little bit more about the differences between proof of work and proof of stake. And this is so that you can really understand where is Elon Musk coming from. So just to recap what proof of work is, and I already mentioned it in one of the episodes which I call what is Bitcoin mining. So you can always go back if you haven't heard it, if you haven't listened to it. But if you have not, then this will be a good refresher. So you might already know that miners, or the people who are mining Bitcoin, the people who are running this algorithm, they find a solution for this specific algorithm, and then they get rewarded for it. They get some sort of reward in terms of Bitcoin every time a new block is mined, is achieved, right? Now, apart from that, all miners need to validate the mined block. So all the miners need to validate each and one of the transactions that are happening in the Bitcoin network. Now, this is very important because if you are making every single computer out there that's running this algorithm, you have to think about all the different PCs, all the different graphics cards, all the different ASICs, mining rigs that are in the world, that they have to do exactly the same thing. Now, of course, because of this, because of how power consuming these devices are, Bitcoin, or the Bitcoin network, consumes a lot of energy overall. In fact, Bitcoin uses more energy than even entire countries such as Sweden and Malaysia. Now, this is something that you're gonna find in different articles. I think this is from the Forbes article, but of course, this is slightly a little bit out of context. Now, I want to be fair, you know that I always try to be neutral. I always try to look at both sides and really analyze what's happening. I don't really want to be biased for some specific reason. So I do believe that there is a concern, or an environmental concern, with Bitcoin. But at the same time, if you're thinking about a global payment system that's frictionless and can be used basically by anyone in the world, it is normal that it's gonna consume more electricity than small countries. Now, if you were to put this into comparison with the US, with the likes of China, or any other advanced and big dense countries, then I would suggest that then there is a real problem, okay? But if you are comparing them with middle to small countries with not a lot of population, then I don't think it's really an issue just now. I think the main issue is not the amount of power that it consumes, but that some part of that power is actually being obtained with coal plants, which of course we know that that's basically the worst fossil fuel that you can use, because it's the most inefficient. And this is where the problem is, because it's so, even though it's so inefficient, just because you get so much reward right now with the Bitcoin prices that they are so high up, it makes it very plausible, and it makes it very rewarding for you to actually do that, even if you go back to coal, right? People and coal factories usually are not going to be, not all of them are going to be used any longer, because they're not really that efficient for the power output that you have. But in this case, it is actually very profitable. Now, another thing that I want to mention about proof of work is that it gives rewards to people with more and more capable equipment, and this is something I already covered. But basically, this is giving more power to the already rich, right? And the thing is, talking more about centralization, is that there are these called mining pools, which combine the hashing power of different computers, meaning they kind of like gather all these devices together, or at least the output of these devices, to divide rewards accordingly. But of course, the problem is that they make this chain more centralized instead of decentralized, and this is something I'm going to cover at the end of this episode. In any case, let's talk a little bit about what proof of stake is. Now, as opposed to proof of work, proof of stake works with validators instead of miners, and these validators, they have to deposit a certain number of tokens into the network. And once they deposit that into the network, they're gonna be a kind of like unable to use them. Okay, it's kind of like if you put an investment for a year or so or some time, where you cannot actually retrieve that money. This is just an example for you to imagine. It's not really what is happening. In any case, this validator is chosen pseudo randomly to mint / forge. So we are not mining anymore, we're minting / forging the next block. Now you will think, okay, if in the case of proof of work you need all this computer power just to get a chance of actually being able to mine the next block, how are you chosen with proof of stake? Well, the way it works is that it has different variables. For instance, you have staking age, depending how long have you been staking. There's also a randomization factor, which means that it's randomly distributed in a certain way so that it's kind of fair to everyone. And there's also a variable, which is the stake amount. So probably the more stake you have in the network, the more the chances you're gonna be rewarded. Now, the cool thing about proof of stake is that validators lose part of their stake for approving fraudulent transactions. So this is kind of not incentivizing them to do fraudulent transactions or to attempt this 51% attack. Now, because of the proof of stake and how it works, you don't have everyone validating exactly every single transaction that is happening. The way proof of stake works is cheaper because not all nodes have to validate a block, and this is very important. This essentially makes a 51% attack more impractical, because if you wanted to make a 51% attack, it doesn't matter if you have all the in terms of proof of work, if you have most of the mining computers, or you have a super global kind of like a mining pool that covers more than 51% attack. Here is not that practical. Why? Because you actually need more than 51% of the total market cap, or the total circulating supply in for the specific network that you're choosing. So of course you are talking that cryptocurrencies are valued at the billions, hundreds of billions, if not more, in some cases. So you will have to have more than 50% of that circulating supply, which of course makes it nearly impossible, or at least it's not economically viable, and that's the most important part. In any case, my final thoughts, first of all, let's talk about centralization, because there's kind of like a myth in here, right? When Bitcoin first came out, it was supposed to take away the power from the government, from the banks, trying to get rid of this middleman and trying to give you that power so that you can actually move your crypto wherever you want without needing anyone else, without anyone saying, hey, you can't do it. You just can't, because it's kind of decentralized, right? That was the idea. Now, the problem with centralization and with cryptocurrencies nowadays is that they incentivize the already rich people get even richer. And now here I'm specifically talking about the mining part, right? About how the network is maintained. I'm not talking about like, well, you wouldn't be able to have put some money before and then make a lot of money. Even if you are not rich, maybe you became rich. I'm talking more about how these networks are sustained. So in this case now, because of the mining, as I said in proof of work, if you are an already rich company, or you are someone with a lot of money, you can afford all this equipment and you can actually profit from that. Whether someone with just a computer with, I don't know, $1,000 to spare, they won't be able to benefit from this. And the same goes to proof of stake, because the same applies. If you have more power, if you have more money, you can purchase more tokens, you can purchase more cryptocurrencies, and you can have a bigger reward. Of course, this is according to a percentage, depending how much, or how percentage-wise, how much more you have against other people who are staking. Now, in terms of electricity consumption, power consumption, proof of work consumes vast energy due to the cryptographic difficulty. Okay, this is what I explained before. But in comparison, proof of stake does not need highly complex sums in order to be solved. Thus, it's more cost efficient to verify the transactions, and thus the power consumption is substantially lower, which might be more beneficial in terms of long-term investment as a payment infrastructure. Now, the last thing is the 51% attack. As I already mentioned, it's rather difficult to do on a big chain like Bitcoin, but regardless of that, it makes no financial sense on proof of stake, because the bad actor, if they can do it or if they fail, they might, and most likely they would lose all of their stake. And because you need to be staking more than you are rewarded, then there's no economical incentive to actually do this. Now, of course, not all the cryptocurrencies out there have a proof of stake model. In fact, there's very little of them that they actually have it, and the ones that come to mind is Cardano. Of course, Ethereum wants to fully apply it, which is gonna be huge once it does, but as of right now, most rely on proof of work, and this is why Elon Musk is hinting at them. In any case, traders and listeners, I hope that you enjoyed this episode of Money Talk with Patrick. Cryptocurrencies are not an easy investment to understand, so make sure you do your due diligence before investing in them. If you feel you have gained value from this or any other episodes, you can support my content through either buymeacoffee.com/tctrading or through tctrading.com. Thank you very much for listening, and I will see you in the next episode. Take care.